Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over this tweet that I'd like to share with everyone. I think it's probably pretty accurate, but we'll see what you guys think. Put in the comment section what you guys think. And he's written down some correlations that have basically broken. Obviously, things that I've seen. What it's telling us is that we're in a different paradigm. We're in a different game. We're not in the old game. We're not in the old game where bonds go up, stocks go down. We're in a game where stocks go down, bonds go down, and eventually, I think the dollar will go down. The DXY will. Not absolute value, not the total value of the dollar. That will always go down, but the relative value will go down. That's when it's game on. But let me read through this. It's kind of an interesting little post that this Paulo Macro guy wrote. He says correlation. It says there have been two regime shifts in correlation since COVID response broke the world as we know it. USD up equals commodities down. This broke. Since December 2020, both can trend together. Equities down equals UST bonds up. This broke. Now both circle the bowl together, the toilet bowl. They're both going down. So we're seeing that. Now, when this thing shifts, where the DXY goes down, commodities are going to go parabolic. That's where my brain is at. Now, let me keep riding through. It says, I think these two flips have forewarned a third and final regime shift in correlation that is inside a year and potentially inside 3 months of happening. And what that is USD up equals risk off. It says this will switch to USD down equals risk off equals equities and bonds down together. That is what we're waiting for. You've heard me say this in my daily updates. I said, I'm waiting for the dollar to roll over. I don't know the exact timing of it, but I'm waiting for that dollar to roll over. And I think what's happening is that dollar will roll over when we get a flattening of inflation in the countries overseas and the euro and the other currencies. I think when their energy crisis kind of flattens out, I think that's where it begins here in the United States, that we'll come under greater amounts of inflationary pressure after the Strategic Petroleum Reserve stops releasing oil and our natural gas prices start to link up to the international prices. So I do think that our USD will go down. I don't know the exact timing. He says, regime shift correlation inside a year, potentially inside 3 months. It's somewhere close. I agree with that. I don't have the exact timing when this thing's going to roll over. But if and when it rolls over, it's going to be game on for our investments in a big, big way. It says, I've said many times, U.S. is speaking Brazilian Portuguese and doesn't know it yet. The third and final flip would be what Brazilians, South Africans, etc. know very well. And almost no U.S., I think he means prime ministers, especially in LS, have any clue about. What he's saying is that the steps that we're going through right now is basically like Brazil and South Africa has gone through before. They know the sequence of events that's happening, and we're going through those same sequence of events where we could have some pretty bad inflation coming. Says, I used to think foreign and domestic capital would freak at our pre-recession banana republic spending. Only in 2023, after the USD breaks a ton of foreign emerging market stuff and Fed pivots. Now I'm worried I'm being too patient in this view. Since June, Biden approval has risen in conjunction with NASDAQ bouncing and gasoline falling. If gasoline can stay restrained, likely given shoulder season and cracks, that's crack spreads, as crack spreads decline, gas prices can go down while oil stays the same, and equities don't fall, there is a chance the market begins to worry about the ultimate tail. The House stays blue, crazy talk, but see what happened to Palin. And Senate flips blue, predicted for this now. 6 months ago, it was a done deal that the Dems were in for a beating. What if the year of the tails closes with the truly unforeseeable wildest tale. A Dem Congress and president who just galvanized his base this week for turnout with a page straight out of Beware the Enemy. And a 2023 recession with DXY at 110, the markets will crater. This is Brazil 2015. It says time out. This is not a political statement. This is a market prospect. And if what I wrote elicits political left-wing or mega commentary, it is an automatic block. Ground rules. I will not suffer bombs going off here. So back to the scene. Imagine it's October 1st and buy-in approval is still rising. House odds narrow to even. Back end rises to 4%, stocks sell off. And despite all the reasons to be long USD, with Fed ahead of the ECB, BOJ, USD finally starts rolling over. Never needed a Fed pivot after all. Just needed the prospect of fiscal dominance. Almost no US prime ministers and allocators have ever even heard the term. And suddenly it's USD down equals risk off equals equities down equals bonds down. After an initial flush or not, correlation 1 flips back. Weak USD unleashes commodities. And this is when your gold finally starts to work. That's it, guys. That's all I got. Remember, please, no political insanity in the replies. And I agree. That's exactly what I'm waiting for, is that USD to turn. And then it's game on for us. Game on in a big way. It's been game on at the bottom of this market. If you were early 2020, we've been in a consolidation period for a little while here. When that USD, when that DXY rolls over, that's wind at our backs, guys. And that's what's, I think, going to take. It's going to take us that DXY to go down. I think we're probably within a year of that happening. So that's what we've got. Here's thread number 2, copper. We're going to go over Paulo Macro and his thoughts on copper, very similar to mine. So let's dive in here, show you what we got. We've got, thanks, Jenny, another minus 1,800 tons gone from global exchange inventories yesterday. Tick tock, tick tock. How is this possible despite slowing global growth and rising recession prospects? We're talking about inventories getting eaten down through copper. And they're heading lower, heading lower. It says, market participants recognize that copper shortages in 2024 to 2030 are profound. Have done the math, and after LME nickel in February, people are becoming hip to central clearing counterparty risks that they once took for granted. This is changing the market in novel ways. I think more than one major player, trading houses, state actors, are drawing visible exchange inventory into private storage on the expectation of higher prices later and to mitigate CCP risk, counterparty risk. The bears will say, but the copper is still out there. I think this is incorrect. Once this material disappears, it will not come back to visible exchange quickly, nor at current prices. Just as Sprott purchases drained uranium carry trade inventory and moved up the deficit a few years, the same is happening in copper. People don't realize it yet because there's no copper sput. People think that China implosion plus global recession equals a copper bear. And if it were 2007, I would agree. But in upside down 2022, people waiting for 2024 miss that the deficit is pulling forward with each passing day as material disappears via consumption or off market. Proof for my case, if it were 2007, we would be in contango and building inventory. The opposite is happening. My view doesn't jive with historical narratives, but it does account for a changing market topology and describes current physical trade characteristics well. And it says, spot on, mate, ditto with aluminum to even a greater extent. The things that are going crazy here, guys, is that we are eating through our inventories of all of these materials. We are starting to see backlogs in order books of companies trying to buy this stuff. And the lead times are getting ridiculous. It says, yeah, the aluminum market is so beyond screwed, I can't even process it anymore. in a way, I lean more to copper because of the obvious substitution effects to come as they rise together. I tend to think Ali becomes unaffordable, aluminum becomes unaffordable sooner, which gives copper more room to run to the top side. What's happening is a lot of people are starting to look at this and they're starting to realize that we've got a big problem coming ahead of us. And it's not that far out in the future. We're talking within a year or two. All these base metals, a lot of precious metals, the conditions that these things are going to trade under are all going to change here shortly. We're going to start to see some massive shortages come beginning of in the middle of 2020s. Now, in my opinion, is the time to start to position in this stuff and be patient for all of this to play out. We're going to see some ridiculous things that maybe we haven't seen before. Shortages of aluminum, shortages of copper, shortages of energy. And it's going to be rough to get copper out of the ground with shortages of energy. So I think that things are going to be changing here quick. They're going to be changing here quick. I am accumulating in these areas, and I'm being patient. If they're going to give me good pricing, I'm going to take that pricing. All right, guys, that's what I've got for today. Give me a thumb up. If you guys like the content, subscribe to the channel, and subscribe to Platinum membership in the description link below. We'll catch you next time. This is Finding Value.